Welcome to another episode of the Denezier Effect Podcast. This is where business owners come in and we give you the front line of what it is to be in a certain type of industry. Welcome to another episode. My name is James Denezier. I am your host.
Okay, let's go.
Today we're going to be talking real estate. So with that being said, I just want to say welcome, guys. How you feeling?
I'm feeling great.
Yeah,
Thank you
it's
for
good to be here.
inviting
Thank you for having us.
Of course. And I'm so happy. Okay, so I just want to give you some time and introduce yourself, and I'll start ladies first. A little bit about you. What do you do, and how did you get to real estate before we start?
My name is Marjorie Valmier. I'm a local realtor right here in Central Florida. I've been a realtor since 2000. Well, let's just say 2 years. It's been 2 years.
2 years? Okay.
I became a realtor. And the reason why I became a realtor is something that I've always wanted to do since I was, 8 years old.
Okay.
But but life just took a different turn as you get older, of course, and it just never crossed that path. But after I purchased my first home,
Mhm.
and going through the experience losing my mom, and that's something that before she passed away, she asked me about it because she knew that's what I wanted to do. And a year after she passed, I said, you know what? Let me make my mom happy. And
Hmm.
here I am.
Look at this. And let me just add something here, right? People, you get into sales, you get into business, and people get into the business. Perhaps it's for money, for helping people. But when you have a personal story attached to what you do, can nobody compete with you? Nobody.
No.
Nobody.
No.
So I'm happy you have a story that's connected to what you do, because now it becomes more than just a real estate transaction.
To me, it is.
Yes.
And I take it personal.
Yes, and you should. And I was speaking with this young lady. She just hired me to be a coach and mentor. I met with her today, and I still have maybe after I got her business plan, her rough draft business plan on my bag because I want to look at it. She finally hired help, but that business plan has been written since 2007.
Oh, wow.
The rough draft. And I'll show it to you. Please remind me, I'll show it to you. So when you say you've been thinking about being a real estate agent for a long time, for a while, it's been a while. Let me tell you, only a few people take a step further to do what they really want to do.
Yes.
So props to you.
Thank you.
Props to you. All right, beautiful. Now, let's go ahead. Now, ladies was first.
Thank
Talk
you.
to us a little bit about your 6-month experience as a lender.
I would not be here if that was the case. Right. So my name's Scott Parker. I'm a native Floridian. Been here all along. I graduated from Oviedo High School. Entered the lending industry. in
You say Oviedo
2002.
High School?
I sure did.
Don't forget what you're saying. Oviedo, I did not like you guys.
No,
Because when I was in high school, y'all beat Oak Ridge High School in basketball.
Right. Oh, yeah. Well, Lyman and Lake Howell were our feuds that took place regularly at the football fields. But I know Oak Ridge. I've been to a game at Oak Ridge.
Oh, yeah?
This was in the 80s.
Okay,
This
let's
is-
not go. By the way, if you're watching this, you was born in the 2000s. Look, forget you. Okay, you don't know what's going on.
Well, I have
but
to
we
be
love you. We love
old.
you.
Right, I'm old just for the 23 years of experience. But so
Yes.
yeah, I started my background in electronics engineering in the early 2000s, and I got out of that after Enron, MCI, and telecom collapsed. And so financial background is what I always wanted to be in, led me into mortgage lending. So created my own business, ran up Lincoln Funding all the way up until the financial crash. Did that through 2008, had to survive, and had everything kaput. Had people coming to my office, bringing me keys to their house. I'm done, don't want no part of this. I too just finished building my own home. 2007, I finished. This is $1 million house, and at that point, I had to turn to God and recognize, okay, what really? You're going to throw me into, into this business and build this house, and then the market collapsed. So had to change my business structure, moved on to a company out of Alabama, Hometown Lenders, with them for 13 years. They recently have collapsed, and I had to migrate myself again and reinvent myself, new business model. Now I landed with Cross Country Mortgage. They're currently the #1 retail lender in the country, and this company has just about every single loan product available for any type of person wanting to get into any type of structure. It's fantastic. With that background I've met many realtors. I've met new realtors. I've upgraded people from out of the industry, brought them into the industry, grown them. As a matter of fact, with Marjorie here, she was one of my first borrowers. As a matter of fact, in 2021, and helped her buy a house. She was so excited about it. She wanted to get into the industry, and she's doing really well. So today we're working together and sharing each other's ideas and what's going on in today's markets.
That's pretty cool. And this tell you this is just not just a basic relationship,
No.
right? This is your lender.
Yes.
And now you are into real estate. He become lenders for your clients.
Yes.
So if you're watching this is just not like when she introduced you to her personal lender. This is history because he's the reason you closing your home.
Absolutely.
Yes.
Look at this, man. This is kind of, this is pretty cool. You mentioned something, and before we start dissecting to the home buying process and so on, I think it's important that we elaborate into that. You mentioned you had to reinvent yourself.
Absolutely.
And okay, let me not get too passionate. When you were in business, every year, every 6 months, or every 2 years, you always have to do some type of reinventing yourself. Whether you close, let's just say, 10 deals this year or 20 deals, but next year you must reinvent yourself to do 50. Because the same work ethic that it takes will not give you the same result.
Well, this is true, but mostly because of the products and the lending and the financial background that has occurred through our country.
Mm-hmm.
So we are a direct result of what Congress, Wall Street, the blood money that moves through this country, which is our economy, we receive the impacts of those decisions made by upper people. And in turn, all we did was sell products. So when those products came out that were highly aggressive, 0 down, 580 credit score, no job, no income verify, we're giving everybody these 2-year arms. And then what occurred after the fact is all history at this point. But when those programs went away, when they came after the mortgage people to make us the fall guy, for in fact, it was much higher up who created the problems. We had to reinvent ourselves and come up with a new plan. You couldn't be an independent mortgage broker. The state of Florida, Dodd-Frank Act, all changed the rules, all put in new laws that prevented what occurred before leading up to 2008. And those can no longer occur today. But the rules that we follow today and the business models we've had to create based on those new rules prevent and sometimes make the lending a little bit more challenging, hence why you need to work with a lender that is extremely experienced, that knows the ins and outs. Hence, when I talk to a borrower over the phone, we're now in today's world reinventing, send them a link, everything's done online, 24-hour approvals. I technically will underwrite that borrower while speaking to them. I ask them all the questions. I don't like every stone not unturned.
Mm-hmm.
So the more that the borrower can disclose to me, the more they understand the process, the more educated the borrower is about the process today, the less headache and the less nightmare that they will suffer through and have a pleasurable experience working with a realtor. Because most of my business is, hey, Scott, I got a fire. Borrower, yeah, approved. Pre-approval said they could do this. 3 days before closing, is there anything that you can do about this? Now, they send me the details. I look at the borrower, and I'll tell them, 24 hours, you're denied. How you got to the point to where pre-approval inspections of cost of appraisal, borrowers out $1,000, $1,500, they should have never gone under contract. They should have never received a pre-approval letter. But where they were working with, big bank, they go by units. So as long as they can get an application in that door, the outcome of the borrower, they don't see anymore because that's shipped off to a local dispatch underwriting division like Bank of America is based out of in North Carolina, Fifth Third Bank, Ohio, et cetera. So those guys locally don't put the borrower's personal needs first. They put their own. They want to create units, and that's how they get paid, a percentage or a BIP is what they would call it. So
Gotcha.
we, being local in Orlando area, work directly. We work for the borrower. And with that borrower knows they're going to get top-notch service. That way, we get them to the closing table, least amount of headache possible.
And that's pretty cool. You're talking about speed and efficiency. You said within 24 hours. That's pretty fast.
Yeah, we've done that. This company now across country, they have systems in place that I've never seen before. I have learned them. Their marketing, their setup. You send a link. The borrower does everything online. We get imported our data within 2 hours. We get the data. We come in the next morning, import the file, run the credit. Their documents, I get them reviewed. I've reviewed tax returns. Doesn't matter if you're self-employed, business bank statements, 1099, we get it all. I review all of it by my eyes. I issue the pre-approval letter right from the system within that 24-hour period. Most of the time, if I issue a pre-approval letter, I'll guarantee your closing.
Wow. That's a strong statement. No
Absolutely.
wonder.
Period.
And you should see how she's like, yep, that's my lender.
Well, she required the same thing. It's like when they come to me back in the day, you would handwrite and manually take the data over the phone to qualify them. And so, if, like I said, if I generate the pre-approval letter, I issue that because as a realtor, their time is most important, and they don't want to be walking around, driving around, gas, time, money, and then find out the borrower is not qualified. So I will absolutely, my reputation is second to none. I need to make sure that borrower gets closed and make that realtor her income so that she feels confident
So
to use me again.
it's your job to make her look good
That
or
is
even
correct.
better.
The lender always wants to make them, absolutely.
That is pretty cool, man. Thanks for sharing that. So, like, you just give so much information. And some of the things that was in my mind to say, you actually just cover them.
Awesome.
So, which is pretty cool. Now, let's go to Miss Marjorie, right?
Yes.
So, as a realtor, tell us a little bit about what do you like the most? Like you meet the person. Like, what do you enjoy the most about the real estate, like the buying process when you meet a client?
When I meet a client, first of all, I'm excited for the client.
Come a little closer to the mic. Yeah.
Oh, sorry.
No, you good.
When I meet a client, I'm excited to meet the client because there's a story, and I'm thrilled to hear the story to why they want to purchase a home. Because remember, I have a story how I end up being here, and my story purchasing my home was basically for my mom, because at the time my mom was in a nursing home, and where I was living, it was not disabled accessible. So I fought to, get my credit clean and trying to get where I need to be to purchase my home. So there was a goal. So when I meet a client, I love to hear that story.
You want to know that story?
Yes.
Did you learn that anywhere or it just come natural?
It just come natural.
Because that's the one of the main point of sale is that when you when you're building rapport, most people don't find out what the story is. Like the moment, like, oh, you're interested in buying a house. Oh yeah, this is what I can do. That's what I can do. No.
Because to me, it's not about the money. Although the money is nice,
it's not bad. It's
not bad. But it's me finding out your goals. What do you want? And it is my job to make sure you fulfill those goals. Right? So that's the exciting part. So once I find out, why you want to buy a home, that's the drive for me to get you where you need to be. So the process, we start from there. And of course, I find my lender to make me look good.
Yes. It's very important.
And we connect. Let's go.
That's good.
And once we get the pre-approval, the next exciting part for me is looking for the home. And I always tell my client, you will know when you find that home. You will know. It will tell you yours. Like my story, and I always tell my client my story. When I found my home, it was pending.
With
another buyer.
But you said this was your home.
I said this was my home.
Tell me about that one.
So,
because I have a story for you as well.
Really?
After that, right after that.
And so I walk into the home. I was like, this is the home. And my realtor was like, okay, let's take a look. She's like, oops, it's pending. I was like, nope, it's mine. She's like, well, I don't know what to tell you because 9 out of 10, if it's pending, it's going to go through. My gut is telling me this is my home.
Your gut is telling you that person may have a good lender,
right?
To give a pre-approval, maybe. But go ahead.
So I said, can we just put me as a, just in case it doesn't fall through? And she's like, well, I could ask. And we did. We kept looking for other homes, but nothing stick. That house stick in my head. And I was like, 2 weeks later, she called me. She's like, guess what? I'm like, what? She's like, they're considering your offer. I was like, what?
Because the other borrower's deal fell through. They didn't have a good lender.
Exactly. That's what I'm saying.
Right?
They didn't have you. That's the problem.
So that's why that's my story about the home process. But yeah,
you there's a story I was gonna share with you. I remember my mom going through the home buying process, and we go from house to house, house to house, house to house. She don't live too far from here, and she got to that one particular house, and I remember how she made me feel when she saw that house, because we saw so many like very nice house, 2-story, like we saw a lot of houses, but when she get inside that house, no, this is the house. The house was so big to a point my dad said, well, there's no way. There's no way. And long story short, she's in that house today.
Nice.
Now, guess who's acting all fancy and all, and they have a garden in the back and talking about this is my house. My dad, the one who didn't believe they could actually get the house.
Oh, wow.
But there is something, and even for me as well, when me and my wife was looking for a home, we went to see so many homes. The one we live on right now, she gave the most high positive impression when she got in there. So just to back up what you say, when you get to your house, you'll know.
You'll know.
Like there's just a certain feeling.
Mm-hmm.
That's pretty cool. That's pretty cool.
Yeah, you'll know.
You'll definitely know. And now I'll just take it a little bit of little history lesson. I want to take us to 2008, and if you don't have the data, or if I'm pretty sure you'll be able to tell me something. When you come to 2008, what happened, right? It was something that was being built, and you just mentioned some of the specs. No jobs, $500,000 home loan. You're still making like maybe $12 an hour. It didn't make sense, right? And then out of nowhere, boom. Now, they say it had to do a lot with the subprime lending sector.
Sure.
Right? Mm-hmm. I spoke with with a couple people. This is not my field. I just want to get your input on there, sure. Right? They said, well, based on what happened in 2008, there has been certain things that's put in place to prevent that from totally happening.
Agreed.
Would you agree with that?
Well, sure. That's part of the Dodd-Frank Act.
Okay,
so one of the primary rules that it's basically the top header line on the law itself is confirm the ability to repay.
Gotcha.
Now, what's interesting is that we needed a law to be passed by our government to confirm. A lender says to the borrower, do you have the ability to repay the loan? I'll give you the money, but can you pay it back? The fact that we needed a law for that is incredible, right? But back then,
they should call it the common sense law.
It's, yeah, but there's things. That's a whole other story here. But it was the Wild Wild West back then. Home prices appreciating. Building is not moving as fast as it was, and you're having multiple offers on homes. I mean, you had 6, 7, 8 offers on a house. I was generating pre-approval letters by the hour because, I would do what your max price point is and then what you're approved for based on a monthly payment. They call me back. So, the house is now $30,000 more. Can I qualify for it? Well, most people, yeah, we can. We can fit you in as long as you're under your max point. And I was regenerating another approval letter and another approval letter. And then, they would get the house. But then, things would happen and we still get them qualified. But obviously the crash came a year later and home prices were just ridiculous.
Oh, yeah.
But, yeah, that's crazy.
Yeah.
But the thing is what occurred after the financial crash. Now, see, the rules were put in place and it was very hard, but a lot of people learned on how to reborrow, and we as lenders relend, but home prices were at a 70% discount from where we were. $350,000 houses now were $110,000, $112,000. I had to go through a list and call everybody and said, listen, this is the time to buy, 2011, 2012, and had to convince them. You will be very happy in 2016, 2017. Oh, this will happen again. Not going to happen again. So I had to explain the rules and all the laws that had to be passed to prevent this from occurring. The banks are gone. We had a whole website, Mortgage Implode, all those. We're like 300 lenders just disappeared who were they were with the banks that were all gone, and the government made sure they were gone because they had to consolidate to keep the lifeblood going, hence the TARPs that Obama put out there for everybody to save the banks.
Nice.
Too big to fail. So needed for those people that purchased at 130, 150. Today, those homes are at 350, 450.
Or more than that.
And they're selling them, right?
Yes.
Now, this was back in 2018. Today, those same houses now are about roughly 550, 650.
Yeah.
Orlando, Central Florida, things have changed. COVID had a huge impact on our values. people are very happy with the value, but then you have a lot of people that are not happy with the value. First-time home buyers, upbringing in Florida. How do we get into a new home? The programs are there. We need them to reach out to us. They need to investigate. The lenders know that we need to help these people because a lot of the properties are purchased from coming out of state, New York, migrated to here. We're at 1,500 people a week are moving to Florida right now. That's
1,500
Chamber
a
of
week?
Commerce have confirmed that 1,500 a week. This year alone, 2025, people are moving here. So we have to be able to get homes for the people that have been existing here, living, working at Disney, working at the many local theme parks. Because the people that come from out of state, they have a ton of money. They sold their homes, $2-3 million. That house, you come down here, same size house, is only $800,000. And they're buying everything up. So we need the builders to build faster, but we need the borrowers who feel they can't buy a home. Give us a call because the programs are there, both for doctors, down payment assistance, bond programs. They're all there, 0 down. And there's actually a program we have that will allow a 1% down for the borrower. We pick up 2% down for the borrower. As long as their income meets a certain rule, we can fit them and get them in the home with just 1%. And then Marjorie here, she'll negotiate with the sellers and have the sellers pay a portion of those closing costs because we have transitioned to a buyer's market, not a seller's market right now. Because we need the properties to move, we need more buyers. And when that happens, the buyers are in control, not the sellers. So pick up the phone, give us a call.
So even with the interest rate right now, we still have a lot of buyers in the market?
There's another good product now. So as of today, jobs report for August came out, very low, 22,000 jobs were added. The 10-year bond, this right now, which is the driver for interest rates, has slipped to its lowest level in 11 months.
Wow.
So when Jerome Powell, the Fed, chose to do our first basis cut, thinking that the inflation was sliding, bonds went in the opposite direction. They went up. People were like, wait a minute, what happened to 5.86%? We went up to 7.5 again, because the bonds, they always know better. They always have, right? So rates we've been dealing with, 6.5, 6 3/4, 7, 7.5, and then the less favorable programs, 8, 8.5. Many people are in the mid-8s, believe it or not. They're ready to refi. But over the last 2 weeks, with the Fed making his comments last week about we're getting ready to do rate cuts, the bond has agreed. And then the poor labor market, things have slowed down. And now we're seeing evidence of that in today's report. Bond level hit 407. So as I tell people, 2.5% added to the 10-year bond will give you the middle of the road of where rates are. So I did a 6 1/4 for a VA recently. I have a gentleman telling me from a competitor, he's at 5.8 on a VA doing a refi. These rates we haven't seen for about 4 years.
Wow.
So things are getting a little bit better. So now's a great time to buy. But people that are waiting, and I tell them, you're not the only person that's going to jump in when rates come down. So when that house is sitting there, there's not going to be one offer on that house. It's going to be 5 because rates are going to be 5.8, 5.7. They all want to be at the same time. What happens to the price of the house drives up.
Yep.
So we're going to have more expensive homes, lower interest rates, a lot more buyers. A frenzy, we believe, is about to start to occur leading into next year.
Which makes perfect sense. Perfect sense. And you hit it right on the nail as well. My parents purchased their house in 2011. Great time to buy.
Yes, it was.
Yeah.
Because that same house is about 400 now. You know, so great time to buy. And they just finished paying it off like a few months ago. But that's just, I mean, every time I mean, I'm not an expert on that, right? But certain people tell me your view on that. If your goal is to purchase a home, say you had the 6% now, like, oh, listen waiting for a rate to come down. Well, the individual say, if your goal is to purchase a home to stay long term, you can afford it now. You should move forward and purchase it. 2-3 years down the line, rates come down, you can always refi at a lower rate.
Yeah, and I tell people they try to save. And I'm like, well, I'm going to wait for rates to come down. The problem we've had over the last 10 years, I mean, Florida is a booming location out of the country.
1,500 a week. I mean, just give me the numbers right now.
They want to be here. We're a red state, they say. Everybody wants to be here. The point being is that you cannot outsave the rate of appreciation. That's the key here. And I tell people, are you able to save $50,000 in 3 years? Right. I mean, in 2021, we had a 40% increase in home prices the year after COVID. So there's no way that you're going to be able to keep up with that through saving.
It's impossible.
So
almost.
I tell people, sitting on the fence and waiting is never the key. The key is to work with somebody that works with you, knows your story, figures out your portfolio, your genetic DNA. It's what we do. Put you in the best loan that fits for you and your price point and get you into a home because it's the fastest way to build net worth. Because a starter home, There is a lot of buyers between 180,000, which almost doesn't exist anymore, to 400. That's the starter home range, and there's a lot of buyers. You run out of buyers, 500 to 750, 750 to jumbo, which is above $1 million, and higher, fewer and fewer and fewer. So those homes sit on the market longer. But when you're trying to get into the market, you need to get in. If you have an opportunity, you need to seize that opportunity. Get with a realtor, let her help you get into the home, buy it, sell it in 3 years from now. Home prices are going to continue to go up.
And some of them also are like, I'm waiting for the market to crash. No,
I've heard
that's
that.
not going to happen.
Yeah, there's circuit breakers, the laws in place. What occurred in 08 will never happen
Will
again.
happen.
Right.
Just like we said in 2002 with the dot-com bust. Oh, this could all re-happen
Right.
again. The laws and things are put in place. Once we learn, we correct them. That'll never happen again.
And another thing too, when you're buying your first home, it will never, I wouldn't say never, but it just expect that it's not going to be the exact dream home you want.
Yes, that's
Start
for
with
sure.
something.
Yes.
Get your foot in the door. You buy that first home, you sell it, and then you can get your actual
What you
home.
need. Yeah. Yeah, because you once you purchase it, you build enough equity, and let's just say, like, you know what? Now you can get the home you actually want. Okay, what's the worst? Let's just say, hypothetically speaking, you sell the house, you make $150,000, and then you put that down on a new property.
Yeah. Well, people think, well, home prices will go down. I mean, I bought my first house. I paid $145,000 for it, 1,800 square feet. That house today is $500. So it's never, they're not going to come down. The key is to get in. It's kind of like an entry-level job. It's what we do at age 16, 18, 19, 20 years old, and you step up from there.
Yeah.
The key is to get in. If you can work with somebody that can get you into owning real estate that you can sell to
You
somebody
can never
else,
go wrong with real estate.
you will end, why pay rent?
That's true. That is true.
Yeah.
Because rent sometimes is even more expensive than the actual.
It has
You're paying
become.
a $2,500 monthly, times it by 12 months. Listen, and then even to get in the home, you have security, your first month rent, your last month rent,
Mm-hmm.
over $5,000 just in a rental. When you can just find your way to purchase your own home,
Yeah.
2 or 3 years later, you can sell it and buy the actual home you really want.
If you think about it, it's just a no-brainer to me. If you ask, it's a no-brainer. Nick, the question I'm going to ask, it will be directed to you. And before I ask you the question, let me tell the audience exactly, how we met and why you handled. We was just talking about that behind the scene, right? So about 13 years ago, my wife and I, we went to an office to take service. And Marjorie, we just met her. She was just amazing. The customer service, she cracked jokes, she make us laugh and smile. All of a sudden, I'm driving back and we talking about you. Like, who's this woman? Like, why is she so nice? But anyway, every now and then, we exchange numbers, and every now and then we'll say, hi, how are you? But it's been a while since we haven't.
Contact.
Yeah, we lost contact, right? And then randomly, my wife went to the mail. And she's like, oh. No, I find the paper on there because she just get the whole stack and put it on there. And I'm like, this person looks familiar. And my wife was like, here. And she's like, oh, yeah. Oh, hold on, babe. This is the... And then she went to Facebook. She pulled your profile. That's when I remember who you were. And long story short, within a couple of days, I call you, we connect, and now we're here.
Yeah.
So before...
I'm sorry, just in case people are wondering what paper, I sold her home.
Yes.
And I did a mail out with my flyers, letting the whole community know I sold my home.
She sold a home. And then it happened to come to my house, right? And which was pretty nice. And because of my faith, I'm like, God never made mistakes.
Correct.
It then just happened by accident. So now we're here. So I'm saying all that to say, with the question I'm going to be asking you is so people can really know that you mean business and you were someone you go above and beyond for people, because they wasn't paying you commission over there.
No.
They was barely paying you over there.
Correct.
Yes, right? And guess what? You're still the best person we met that day with your personality and how you make us feel. So now you have your own business. You're operating in the real estate space. Tell the buyers or tell the audience, what are some of the things they would need maybe the first 3 things, the first 5 things to really start the home buying process. So when they call you, what can they expect that you're going to ask them before you send everything to him? So what are the things you're going to be asking?
The few questions I ask them is,
of course, beside the what we already cover, the why.
The why.
Yes,
No.
which is,
Well, correct. So the question I would ask them is, number one, how much money do they make, either by year, if they can't figure that out, just give me a ballpark. How long they have been working, because you have to have at least 2 years.
2 years, yes.
Of working history. Their credit score. Where do they actually get the credit score? Because they can go to a site and it doesn't give them.
Oh, you're telling them Credit Karma is not accurate? Tell them yes. Tell them yes.
It's better than it used to be.
It's actually better than it used to be.
Absolutely.
Okay.
I've been monitoring it for 8 years.
He tells me that.
Yeah.
Yeah. But how much money they already have in the bank. Have they saved any money? And of course, like I said, the credit score. So those questions I would need to know before we move forward.
Okay. So.
And where they want to live.
Yeah, of course.
Well, I don't ask where they want to live first, because I need to know the income, the credit score, right? And how much money they already have saved up. And that would tell me, because it's based on what the amount you're approved for. Because you could want to stay in a COE, but you ain't got a COE money.
I like that.
That is correct.
I like that.
So I'm not going to ask where you want to live first.
Let's see what your financials look like.
Correct.
Because you may say, hey, listen, I was driving in the Windermere area. I have to have this house.
Okay.
And the pre-approval come at like $200,000.
Right.
Come on.
No.
That's the down payment.
Not on that day. Right?
No. But you can take that $200,000, sit on it for long enough, save your money, and then we can go to Windermere. If that's possible.
If that's possible.
Well,
you never know.
You
They
never
can buy an
know.
investment property.
Correct.
You never know. You never know. So as a lender, what are some of the red flags that you see? Some of the red flags, like you're talking to somebody and then the red flag just go up. So give us a few red flags where you're like, nah.
That's not
Well,
what happened.
that's almost every scenario. So when the borrower hesitates, right, I'm asking them questions. I have this job. I've recently closed a loan where the gentleman had 5 jobs. Went to the builder denied him.
Can I ask you a question?
Sure.
Was he Jamaican or Haitian? Please tell us.
I'd rather not disclose. But not that has any bearing. A car salesman, right?
Okay, I mean, just a disclosure, I'm Haitian, Jamaican. Like we talk about each other like that all the time. We have 5, 10
and
jobs.
I've had so many Haitian borrowers, I've had to try to learn Creole. I really have tried. And I was like, it's a hard language to learn.
Well, you have a Haitian realtor?
Oh, well, not anymore. Well, just you now. But this is back then. Who referred me to you?
Me?
Before.
Oh, before. It was somebody else.
Yeah.
Somebody else?
Yeah.
Yeah.
Okay.
Well, she was Haitian too.
Okay.
I've worked with a lot of Haitian realtors over the time.
That's good.
But my reputation precedes me. They call me the bulldog. Okay.
The bulldog. I like that.
I will tell you what you need to hear. A lot of people don't like to hear the truth. And so when I hear the red flags on the phone, cause of job change. My wife, and I understand Hispanics, I really do, that their girlfriends are their wives. God bless you. But when it comes to law, right, they need to be married. Okay. Now you can still buy the home without, they don't need to be married. But when you disclose the wife, and we later find out that you're not married.
Oh, wow.
Or I've had a home before. Yeah, the bank took it from me. Is that going to be a problem? Or I've had an issue where I don't have any credit cards today. So how do you pay? I have $200,000 in cash.
Oh.
They deserve to give me a house. I'm like, okay, so you want a house exactly $200,000? Well, I'm not going to spend all that money. So what? You have credit? No. I went through a bankruptcy, and those credit cards ruined me. The credit cards, the plastic did this to you. Yeah, yes, absolutely. So they did not rebuild. So there's a whole nother story and class that I can do on credit. So I tell people, and the best example is Your house catches fire, much like your credit. We went through it in 08. It burns down to the ground. You get angry. You move away. You go rent somewhere else. You come back and say, well, it's time for me to live in that house. Well, that house still burnt to the ground. You didn't rebuild. Okay. So as I tell people, walking away from a problem and hoping to come back to it being fixed on its own will not happen. So the red flags I tell people, are you committed? Are you confident? Do you stay employed? Do you have savings? Okay. I've had clients where they make $200,000 a year and in the bank they have $3.
Oh.
Now, where's all of your money? And I will ask you, where's your money? They like to go out a lot. We like to party a lot. I understand that, but an underwriter will
shows.
see you make a lot of income, but you're spending all of your money. The credit reflects it as well. So their scores may only be 580, 600, slow on pay, those kind of things. So through a conversation, like I said, everybody's DNA is different.
Gotcha.
And through the conversation is how I learn about that borrower, and I make the situation about the borrower because the borrower doesn't want to be a number. I want somebody that works for me that will listen to me, listen to my problems, and tell me, how do I fix my problems?
Correct.
How do I get to where I want to be a homeowner in this state of Florida? This is what I do.
Gotcha. That's pretty cool. And what would you say, because there are different type of loans, right?
Many.
So many different type of loans. So say Marjorie here bring you, and I'm asking this question with intention, right, for the viewers. Say Marjorie bring you a client. So you guys are teamwork working with this client. When do you make the decision, would this person be better with an FHA or with a conventional loan? When do you make that decision?
Okay, so on the phone, when the borrower, we're talking to them, I can determine, do they have a lot of money down or they have a long employment status, okay? And then they determine if typically you're putting more down than 20%, okay? I don't want to pay any MI. If I've been a homeowner before and I don't want this and I don't want that and I want the better rate. Those are typically conventional borrowers because they're seasoned. They're traditional, right? Borrowers that are up and coming, borrowers that have had bankruptcies, borrowers that have had foreclosures in the past, repossession, slow pay on credit cards, and those kind of things. FHA borrower. So typically I would say if you have a credit score below a 720, I will lean to FHA, okay? If you're above a 720, we'll look to conventional because effectively mortgage insurance is the key when you're only putting down 3%. So FHA has a low premium on a monthly payment, but conventional for lower score borrowers, private PMI or private mortgage insurance, very expensive. Lower the credit score, the bigger that monthly premium is. So it wants you to lean to FHA. Higher credit score borrowers, very small monthly MI payment. So if they only put 5% down, you have a 780 credit score on a $200,000 house, you may only be paying $40 a month for MI, where FHA would be like $130 a month. So the math is the key. It's always the math. And as I tell my clients and I tell the realtors, how do we get these clients into these homes? It's through loan structure. And it's not about the rate. It's never about the rate. I tell people they want to focus on the rate, but it's the payment. Can you get me into the house that I want with the payment that I want? Yes. And here's how we'll do it. Okay. Because people say, well, what about this interest rate? Why is that key? And I will tell you. When you borrow $100,000 and you keep that house for 30 years, how much did you actually pay back to the bank? $212,000. Now, does that sound like a 6% rate to you? No, that's Rule 72, okay? Compounded interest. So the only time you actually pay the actual rate that's on the note is the very last payment. That's it.
It's just really crazy.
So I get clients to focus on what's important. Let's focus on your payment. And many clients, I ask them, do you have, part of my pre-qual that I do with them over the phone is, what is your targeted monthly payment? Most people have no idea. How would you know what you want to be in if you don't know what the payment is you want for that month that you're paying? Because here's what happens. When you go in uneducated and unclear about what you need, you're not going to own that house. That house is going to own you. And that's where people get into trouble. And so I try to do my best up front to clear all that, educate them, open their eyes, pull the curtains back so they know all they need to know about the mortgage and lending industry to work well with the realtor so there's no headaches and hiccups.
Pretty cool. Yeah. Behind the scene, there are so many things happening behind the scene. You know, when you work with buyers, to them, they see the end picture. Hey, listen, I just want to be in a house. Some of them, when you work with them, it can be impatient. Some can make you a little upset. They qualify for 300,000, but they want houses for 500,000-600,000. That's what they want to look at.
I've had that borrower.
I'm dealing with one right now.
You're dealing with one right now.
Yes, she is.
So behind the scene, I want the viewers to know it's a lot of work for the professional who does this. It's a lot of work. So even though you talk about speed and system earlier, but at the end of the day, you still have to do your due diligence. You know, and look at what you just mentioned. Simple. What monthly payment would you be comfortable with? You don't know, but you want a house.
Correct.
That's crazy. Let's kind of peel the layers a little bit to like, okay, common sense.
Yeah, well, people, that's kind of scarcity in today's country, hasn't
Or-
been. for the
That's
last few
true.
years.
Or they know the amount that they want to pay, but want a $500,000 home at a $2,500 monthly.
Not going to happen. Not
not
in today's world, because things have changed, especially the people that have been out of the market. It's been a while. They could have been through a divorce, bankruptcy, all this and that. We've all experienced that through the early teens, right? Now they've rented for a while. They want to come back to the market and find out the average median home today is $435,000. And they're like, well, how am I supposed to get into that? Where's my payment? Where's my $2,000 a month payment? I'm like, $315, $285. What? And property taxes are higher.
Yep.
Now, if we can push for Governor DeSantis to eliminate property taxes, I'm on that train.
That part.
Let's go.
You'll be the first in line too.
I am
and let me
waiting on
tell-
that day.
And what I'm so happy about that is what I've been trying to put letters to the government over there in the legislature, let them know that when you remove property taxes, right, you are bringing buyers into the market, because with the median price being where it's at versus where we were, you get rid of the property taxes that they only have to pay, should only pay once. You're now freeing up $300-$400 a month of money available, right? Well, that's like $150,000 to $200,000 of purchasing power. So where they were at $200, $250, they're now at $400, $450. You eliminate property taxes, you're now bringing the average Joe, which is who we're talking to and needs to be, into a home. We're now putting them into a home that they can now afford at the average median price point.
That's really
and
cool.
we will cause a house boom, and our economy will grow like they've never seen.
Correct.
It's a great way you mentioned that. You know who really, that's just a personal conversation I have with my other brother. It's just that government and people in charge, certain things they do, they don't make sense, right? And years ago, he spoke about that. And he was like, he has an accent. You've been away in America, so when do you really own your home? When do you really own your home? No, you're working for the government, and it's not right. This something got to change it. And I know when he see Governor DeSantis made that announcement, he's happy, because you think about it. Do you really own your home?
No.
And you bring a valid point. But also, you say we have about 1,600 people coming weekly. 1,500 coming weekly. Like, if that were to happen, we're going to have like 35 weekly. It's going to probably double.
And I do believe it'll be coming in the very near future.
That's crazy.
I'm holding on to it. No, it's common sense that needs to apply, and we have a governor that's really applying common sense, and it's about helping people. Now, government has not been about helping people. We've had many of
You
the
can say that again.
administrations. So their key is to take in money. Their key is that they line their pockets. They don't do what is best for the people. So it takes the professionals that are at the working level to lobby against the government to get them to do what is right. And so once they understand the mathematics of what this will do and how to help people, and when people they'll all get reelected when the people are prosperous. And that's the key, is to help people become prosperous. And how by doing that? Get them into a home, because it's the top of the pyramid. Okay, when home prices or when the home economy starts to falter, what are the first two stores that fail? Home Depot, Lowe's, all home improvement. Okay, when home improvement fails, what happens next? Clothing stores, right? They go. And then when the clothing stores goes, forget about it. Then Publix is having a hard time. All the grocery stores are having a hard time. And then everyone's forced to go to Walmart and Dollar General.
It's a domino effect.
It is. That's why the owning a home, top of the pyramid, is where we all need to be. So anything that we can do to help people get there and get their foot in the door is what we want to do best.
That's great, man. That's really great. And before we get to our final words here, there's something I was speaking with you, and I spoke with you about that when you come into the office a few weeks ago, which is the home buying process, right? And we spoke about the mortgage protection plan, but it's a life insurance product, right? And for those who are listening, the viewers right now, one of the things that we discuss, which Connecting America, that's one of the strong point that we do is the insurance part. When she puts you in a home, he works on the loan and you get the key.
Mm-hmm.
The work is not done.
No.
The work is not done. And here is the breakdown of it. For you to have a closing, for the closing to happen, you're going to sign the paper. There's two type of insurance that you need. You need a mortgage insurance. The mortgage insurance protect who?
The lender.
The lender.
Mm-hmm.
So meaning within that 30 years, if you default in your mortgage, the lender is okay because that's why it's mandated for you to have insurance. So you protect it.
Mm-hmm.
The second insurance you need is the homeowner's insurance. Why? If the house get burned, if anything big happen, insurance can cover the property. So these are the two insurance you really need. I don't know if I'm missing one, but are there anyone else?
No, that's pretty much it. That's mandatory. The home needs to be insured.
Mandatory, right?
Yes.
And what I was talking to you behind the scene was, well, congratulations, you have your home. Here's the key. You get invited to the next barbecue for the home. You better be in that barbecue, right?
Yeah.
Listen, because all your family member will know who
sold that
who
home?
sold you that beautiful home.
Me.
Right? And how did you get that money to buy this home?
I look for housewarming.
Right?
I always look for the invites for housewarming.
So now 30 years now, or if it's conventional, 20 years, whatever it may be, you locked in. So the mortgage is protected for the lender. The house is protected in case of fire or flood or whatever.
Mm-hmm.
But what's protecting the homeowner himself or herself?
Nothing at that point.
Nothing at that point. And I think last time I asked you, say, well, God, right?
Right.
We pray for all our clients, by the way.
That's true.
So this is when a mortgage protection plan come in. It's a life insurance policy, right? So why is that important? You can take a policy for 30 years if it's a FHA. You can take a basic term. If you're 30 years old, you're healthy, less than $50 for like $400,000 worth of coverage, right?
Sure.
Consider you're in great health. During the 30 years, if you were to pass away, the home get paid off.
Mm-hmm.
During the 30 years with something called living benefits, if the person experience a chronic illness, critical illness, terminal illness like heart attack, cancer, stroke, and so on, they can access that, let's just say $400,000, up to 90% of it in some case.
Wow.
Mm.
Nice.
And that become an income replacement. While you're still alive, you replace your income so your home not go to foreclosure.
While you're still alive.
While you're still
That is
alive.
very important to know.
Mm-hmm.
We're going to do business
I like
together,
that.
right? So typically when you think of life insurance, it's like, okay, yeah, when I pass away, my family's great. Yeah, base of it, that's that. But just like, iPhone has been upgraded, back then you used to have like, when you think of cell phone, it was like this big, right? But today, this is a cell phone.
Right.
We still call it a cell phone, even though it changes. You can email, you can text. It's a computer. Take
It's a
pictures, but we still
upgrade.
call it a phone.
Yeah.
So same thing for life insurance. People still call it life insurance, even though it upgraded over the years.
Yes.
You no longer have to die for you to use your insurance.
More people should.
People should know.
Yeah.
Yes.
So when you get your mortgage done, you get your home, make sure you get your mortgage protection plan, life insurance, to make sure you protect yourself. Because over 51% of homes that go to foreclosure, it's either the husband or the wife gets sick. They can no longer afford to pay the house. Now they have to go to foreclosure. Over 51%.
And the sad
Yep.
part about that
Yep.
is the equity in the home. They lose the equity.
They lose
Yeah.
the equity.
I've had a
in the
lot of
house.
clients, they understand the math because the basics we don't learn when we're young. And so they forfeit that equity in that home, which could have saved them.
Yeah.
It's unfortunate.
That's
Yeah.
unfortunate.
Yeah.
So yeah, get yourself mortgage protection plan. Get yourself a life insurance that will protect the mortgage if you pass away, and also a life insurance that will put money in your pocket if you get sick. You can no longer work because of a major illness, so you don't have to lose the
Right.
house. So we're working on a program, and I told you we're gonna call it Realtor's Choice.
It's nice.
And realtors now you can talk to your clients after closing and say, hey, this is what you need next. And even as a lender, as you are doing your analysis and so on, hey, after you close, make sure you get this. And it's probably going to cost you not too much money.
Yep.
So you educate the client because so many people are going to foreclosure. it's not because they're bad people or they don't want to
No.
pay. No, it's
Things
simply
happen.
because life
Life
happens.
Life happens.
Absolutely. We all
Life
say
happens. So,
Mm-hmm.
in closing, what are some thoughts? Like some of the things home buyers should know. I mean, how to reach you, So state your name again. Tell them your phone number, how they can reach out to you, and right after you, we'll have you do the same thing, and then we can wrap up soon.
Once again, my name is Marjorie Valmier. You could reach me at 407-535-1865, or you could also follow me on social media. I'm on all platforms. You can't miss me. You can find me. Or you could reach me via email, and that's easy. miss.marjorievalmier@gmail.com.
That's what's up.
Nice.
That is what's up. Now,
So,
please tell us how.
Right. It's Scott Parker at Cross Country Mortgage. So, located in Longwood, been in the Orlando area, easy to reach. I'm on Facebook as well, Scott Parker, Cross Country Mortgage. So, scott.parker@ccm.com. And my cell phone number is 407-421-6990. Office number 407-478-2816. Been in the same place for 20 years, not going anywhere. And you'll get a birthday card from me every single year.
Really?
I have
He
a compile.
does.
So
I bet you still get it even.
He does. I was like, you remember me? And back to piggyback off what he called himself,
The bulldog.
When I'm referring clients to him, I said, look, when you speak to Scott, he doesn't give you run around. You come with everything up front. He's a sharpshooter. Whatever you need, like everything you need, you have to have it because he will get it done. But you need to be like,
Yep. So you get them ready
yes.
to deal with the bulldog.
Yes. He's going to get you right, but you better come prepared.
You got to be prepared.
Yes.
That's beautiful, man. Over 20 years of experience. And this
And
is.
I'm sorry.
Yes.
I mentioned my name, but I did not say which brokerage I was with.
Go ahead.
Sorry.
Yes.
I'm with Home Premier's Realty.
Home
by the way.
Premier's Realty.
Yes.
Awesome. Beautiful. Thank you for that correction. Thank you for that correction.
correction.
So over 20 years of experience, and also you were the lender who helped her to get her home. And as we stated at the beginning, this is not just a typical relationship. This is great friendship, family, because there's a special connection there. So with that being said, I hope you enjoyed this episode. I hope you get value. You heard of the contact information and you know exactly how to find us if you need anything. May God bless you. May God bless your family. And may God bless this beautiful country we call America.
Amen.
Bye-bye, everyone.
Bye.